Good morning, everybody. Today is the last day in the month of June 2022. My name is Heritage Adisa, Markets Analyst at HFM Nigeria. And as always, we check through the markets, find out what the overall sentiment is, what the drivers are, the factors pushing the sentiment, um, how it affects asset classes, and it provides opportunities, and then if on how we can take advantage of it. But like always, please remember that this is just a communication material and nothing in this communication contains or should be considered as investment advice or investment recommendation. Please acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty. That any investment of this nature involves a high level of risk for which users are solely responsible and liable. Now, what we have this morning in terms of the overall environment is risk of flow across board. And we have that negative start. Yesterday, we had more of a lackluster performance, but so far today, the risk of flow has come back in play, which has been mostly the theme for really most of the year, really. And then even worse for the month of June. Right, and then it's also going on as well today's session. It's not like there's been a particular new reason. It's still been the old same catalyst. Catalysts like fear of recession, catalysts like high inflation, central bank monetary policy tightening. All of that has really been a bone of contention really in market. So I had this written down earlier, and let me just go through it now. I said the risk of flows to end Q2. After yesterday's lackluster performance in equity, because yesterday we had mostly a flat move, mostly just sideways movement in equity space generally, push and pull. We had that. Risk of flows have once again continued in markets and once again come back in play in markets, sending risk assets lower across board. You look at equities, for example, equities are down today. US 500, for example, is down about 1.3% already. You look at the oil parts, oil prices are lower. UK oil gap lower, down nearly 3% today. You look at the yields part, yields are broadly lower across board. The US 10-year yield, for example, is down about 1% in today's session. And you look at the side of measures of volatility, the VIX is also higher as well in today's session. Now, that's really where the asset classes are. Now, recession remains the key worry for markets. Yesterday, we had a meeting of top central bank leaders, right, in Portugal, where they really didn't do much to curb fears, right, in markets, recession fears. For example, Federal made it clear that, their major focus, their top priority is really fighting inflation, right? Avoiding recession comes second, right? Basically, we had other central bank speakers also say that, they need to fight inflation, even though pushes the economy into recession, right? So if that's the case, that means that there's still so much, the worry for a recession for global markets is very much valid and it's still very much in play as long as central banks are not backing down on it. And it's not like the inflation measure is, or has started to pull lower. Yes, there was one time we had some talk about peak inflation. It's still very much there, right? It's still an underlying theme, but it's not really a major right now. I'm considering the fact that we are far off central banks, inflation cap. We are far off it. We're talking about 8, 9, 10%, right? Compared to the 2-3% cap that we used to have. And so they're still way up. So even when we talk about peak, it's still a long way down. And that means the central bankers will still have to keep tightening and tightening. And that's really a strain for equity markets and risk markets, risk assets generally. On the currency side, safe haven currencies lead the majors. That's clearly in line with the risk environment that we're seeing. JPY is top for majors as well. We have the dollar also there. For JPY, bond yields falling helps. Lower oil prices also helps because Japan is a net importer of oil, of energy generally. So there's that. Then on the other hand, on the weaker side, you have the euro lagging behind the most. You have the CAD also lower. But then surprisingly, the CHF is also lower, which is not really a surprise. I mean, the CHF has been leading FX majors for the entire month of June. So towards month end, quarter end, nothing says you can see some form of pullback and profit taking. That's what I'll really attribute the moves on CHF to, right? On the technical side, looking to pair Euro and JPY is one of the only ones really of everything that maybe just looks a little bit good on my own side of the technicals. We've broken through 142.5. That was the low of early in today's session as Asia, as well as it went throughout yesterday as well, right? So we already got some form of pullback. If you can really pull back to that level, then sellers could be keen on that level looking for further downside. You look at Euro USD as well. It's barely moved, right? Belly move. That's one of the strongest and the weakest currencies so far today's session, and it's belly move. Just the total movement is really tiny, and it's struggling around 1.045 in today's session. USD card also pushing higher as well, takes a nod above 1.29. Now, take note, being the last trading day in the month of June and quarter two, we have month end, quarter end flows to contend with, and that could really make markets, trading, things generally a bit messy. So have that at the back of our mind, right? Especially when you look at the FX pairs, and then yes, apart from USD, Euro, JPY, the other moves are just really all over the place, not really smooth like you'd like, and still a bit messy. Later today, we have OPEC meeting, continues today as well from yesterday. Not much is expected from it. We're not expecting them to increase any form of production anymore. They already have one lined up already up through to September, I think. So not much is expected on that front. Later, we have US PCE price index. Interesting. I mean, CB Lagarde as well. But aside that, there's really not much, lined up for the day ahead. So basically, just expect market sentiment. Currently, risk off. Expect that to dictate market flows today. Month-end flows as well. Profit taking, rebalancing, all that to also be a key driver as well in today's session. I will be more patient generally, and I'll wait to really get this month-end and quarter-end out of our faces before jumping back in full-fledged confidence. Right? Having said that, let's just run through the charts just quickly. First of all, what we were talking about yesterday. This is what we were talking about yesterday. Basically, we just really stayed in one space and really did not go anywhere. And it's basically the same case almost across the equity space. Yes, some of them went up, some went down a bit, but generally we had that overall flattish movement, in yesterday's session. So far today, we've continued to move lower. Started basically on Tuesday. Let's just see what we can do with this. Basically on Tuesday, we started that flush lower. We paused yesterday, and now we've continued lower as well in today's session. Down already by about 1.13%. We're seeing some form of pullback, right? This will have been a very interesting one to look out for this level. If we could get a pullback towards this level, then I will personally be interested in looking for further downside on this, because it was the lows going back to yesterday, also a couple of highs going back to the 23rd and 22nd of June. So that would be that to look out for. For oil price, for example, we talked about UK oil. UK oil, gapped lower heavily, right, into this session. Right now, so far in terms of trading, we've just been meandering very, very close to that 112 level. Right, basically, we haven't really gone anywhere really in today's session. So there's that to look out for. In the currency space, I was talking about Euro JPY, right? Now, this is what I'm talking about. Now, the lows that we had, even earlier in Europe, as well as even Asia, as well as yesterday's low American, yesterday's, I think Europe thereabouts, right? We had that low very, very close to this, or at this 142.5. Now, in today's session so far, we already had some form of pullback. We didn't really get there, which is something I would have preferred, right? But we had some form of pullback. Then, if you're going to look at this, there are a couple levels to the downside to look out for. First is 142, and second would now be 141.5, right? There's that to look out for, but apart from this, you want to look at something like Euro USD, for example. All right, let's look at Euro USD. Euro USD. Let's clean this up. All right, Euro USD so far today, basically, the net change for today is just 0.004%. And this is one of the strongest and weakest currencies today. So that gives you an idea of the size of the moves that we're having so far today. Now, it doesn't mean we can't see continuous downside. When we clear this particular low level that you're seeing yesterday's lows to the downside, we can look for retests and then look for further pushes lower on this particular one, right? All right, having said that, you want to look at CAD, for example. CAD is also an interesting one, maybe USD CAD in terms of strength and weakness, right? But then in today's session right now, just the grand higher is there, right? Let's get this going, right? The grand higher is there a little bit, right? Up just hard for today's session, but not by much. Right now, we are trading at this overhead resistance here, right? Around going back to the 27th of June. So there's also that to also be very, very cautious about. I think month and quarter end just calls for more caution, calls for more patience, and that's the kind of the route that I'm taking in today's session. Now, on the calendar today, like I said, we have a couple of data points to pay attention to. Yes, core PCE for the US is expected out. Lower numbers compared to the previous numbers, which is not really a surprise. Apart from that, we also have monthly GDP for Canada, also they're expected. We have ECB Lagarde also expected on the rise as well, but there's really not much, on the economic calendar into this session. So keep it simple, keep it clean. let's just see how it plays out into the session, and then pay attention to the overall sentiment. Right now, risk off, and then you have JPY USD leading, and then CAD and the euro lagging amongst the major FX. Thank you. Do enjoy the rest of the trading session, and happy new month in advance. And do take care. Goodbye for now.